A few graphs about wages to start with. Annual growth in wages was 3.7%, the highest in a decade, but there are fewer people getting a raise. The proportion of employees saying they got a pay rise has fallen from 2/3 to less than 40%. 10% got more than 6%, which is also a decade high, as is the 40% getting between 3 and 6%. The 0 to 3% brigade is down from 80% to less than half. Around 90% of businesses are still reporting that they're having trouble finding staff, which may have something to do with the fact that their staff are not keeping up with inflation. Real wages growth has improved a little, but it's still deeply negative. The Australian dollar dropped when the wages data came out because that 3.7% was a bit less than the 3.8% expected. But then it rallied and then it fell again and kept falling and is now in the low 66s. Rhythm Biosciences, the Aussie biotech developing a blood test for colon cancer to replace the poo sample, saw its share price almost double today after announcing that it's got regulatory approval in the UK and Europe. Apart from that, it was largely red ink, with Incitec Pivot down 8% after a disappointing half-year result, and miners down as well after falls on commodity markets as a result of that weaker than expected Chinese economic data yesterday. And the US share market fell after President Biden put off his trip to Australia because of the debt ceiling crisis. Things must be really bad if he can't come here. And that's finance.